When you're looking to finance your franchise business, it's best to approach a franchise specialist bank. The bank's franchise departments regularly evaluate franchises and monitor the ongoing performance of franchisees. Preferential terms are often available, particularly for well-established and proven franchise brands. Not all banks have specialist franchise teams, so choose wisely. The British Franchise Association website lists banks currently affiliated to them. Banks can offer various finance options to suit your own individual needs. For small loans, the bank will consider lending on an unsecured basis. However, for loans above £25,000, they do start to look for security in the form of your personal assets. If you don't have assets to offer the bank as security, they can consider the government-backed Enterprise Finance Guarantee Scheme. In this scheme, eligible businesses with strong business plans can obtain bank finance they require, which is partially guaranteed by the government. It is a more expensive way of borrowing, as there is a premium payable to the government for their guarantee. However, it's a great way to obtain finance if there isn't sufficient assets available for the bank to take security, but the business plan stacks up. Debtor finance can provide much needed cash flow support for some businesses by advancing funds against invoices due to be paid in the future. There are several banks and finance companies that offer factoring and invoice discounting solutions for businesses. Lease finance options are available to purchase assets such as vehicles and IT equipment and may be considered alongside or instead of bank loans. Property owners may consider raising capital they need to start their business by remortgaging their home or investment property. Some mortgage providers won't allow you to remortgage your property and use the funds for business purposes, so check with your mortgage company beforehand. Some people prefer to raise funds from their family rather than borrow from a bank, or to supplement the required bank funding. A gift from family or friends doesn't require repayment. A family loan, on the other hand, is expected to be repaid at some point, although it can be more flexible than some bank finance. If you're considering accepting a family loan, you should make a formal agreement so all parties are clear about the terms of the agreement and when repayment is due. Whilst gifts will be considered as capital introduced by the franchisee into the business, a family loan would not be treated in the same way, and it may reduce the maximum bank finance that will be considered. Personal loans should not be used for business purposes, and the lender is likely to reject any personal loan requested to finance a business. Available spending on credit cards negates the need to apply for funding as your limit is already in place. It's not advisable for anything other than very short-term purchases to put it on a credit card. If you decide to use a credit card, then ensure that you look to refinance before you need to pay interest on the purchase. It's hard to keep track of all grants that are available because they tend to be short-lived. There are a large number of government grants around for small firms, often industry sector specific and mostly regional. The best place to start is the government website www.gov.uk. Unlocking funds tied up in your pension may be another alternative source of funding a business for some people. Before proceeding down this route, it's best to take advice from a reputable and suitably qualified financial advisor. There are alternative financing options such as crowdfunding and business angels that you may have heard of. However, in most cases, they're not viable options for financing a new start franchise. Crowdfunding is a way of raising usually small amounts of money from lots of people via a website. Businesses with a good idea pitch their project online and offer rewards or financial returns for people that pledge or invest money. Crowdfunding isn't commonly used for funding a new franchise. Business angels are private investors who provide funding in return for an equity stake in the business. An angel will often want a say in how the business is run. Angel funding isn't usually suitable for financing new start-up franchise opportunities. There are several sources of finance available to business owners. However, it's advisable to seek professional advice as to which is the right option for your business. Put yourself in the bank manager's shoes. Think about what they're looking for. when approached for finance to set up a new franchise opportunity. Banks use a variety of tools to evaluate funding propositions, although bank managers will usually base their lending decisions on the traditional canons of lending. Character. Banks will lend when there's a very good chance they'll be repaid, so establishing whether a customer is trustworthy and their track record is an important consideration. If there are any doubts over the customer's integrity, the lending proposition won't proceed beyond this stage and will be declined. The bank manager will look at whether the customer is making exaggerated claims or being too optimistic, or adopts a more reasonable and conservative approach. The repayment of any previous borrowing will be looked at, and for new customers, bank statements will be requested. Capital. The level of finance available from the bank will depend upon the strength of the franchise system as well as your own business plan. Typically, for well-established franchises, the bank will lend up to 70% of the total setup costs, including working capital. For newer, less proven franchise systems, the amount of finance available may be reduced. Capability. The bank will assess the business owner's experience, attributes, and ability, as well as any key employees, to operate the business successfully. Purpose. The bank manager will wish to establish that the purpose is an acceptable risk and in the customer's best interests. Amount. The lender will consider whether the amount being sought is appropriate. The amount requested should be in proportion to the customer's own stake. A reasonable contribution from the borrower shows their own commitment. Repayment. Repayment will usually come from the business trading profits, and this is where your projections will be thoroughly tested by the bank. A franchise specialist bank is likely to have experience of existing franchisees in the brand you have chosen to invest in, and can draw upon that knowledge to consider the repayment capabilities. Terms. The terms offered by the bank will reflect the risk involved in the lending. Proposals that include adequate security are likely to attract better interest rates from the lender than unsecured deals. The amount and complexity of the work involved will determine the level of fees. Security. Security may be required as a second repayment source for the borrowing. The bank may ask for personal assets with sufficient value to be pledged to support any finance agreed. The most common form of security would be a legal charge over a residential property, although the bank may consider other forms of collateral, so speak to the bank manager for guidance. Don't be put off if you haven't got security to offer the bank. The government-backed Enterprise Finance Guarantee Scheme may be available for those who've got a good, strong business proposal but lack the security that banks usually require. Speak to the bank's franchise unit to discuss whether you qualify for finance under this scheme. The bank manager may take a few days to review your plan and financial requirements. They may need to obtain sanction for the requested funds from the bank's credit department. Once the lending has been sanctioned, the bank manager should set out in writing the agreed terms of finance, including the costs. If you wish to proceed, then confirm your acceptance of the bank's terms and the bank manager can prepare the documentation and the security arrangements. You should be aware that it's likely to take several weeks to complete the security requirements. Work closely with the bank manager to ensure there are no delays in releasing the funds for you to attend the franchisor's initial training course. It is sensible to have sufficient capital to cover projected expenses for at least 6 months. Have a contingency reserve fund to fall back on in case the business takes longer to get off the ground than you have anticipated. Your initial contact should be with the bank's franchise unit, as they have the expertise to guide and support your franchising plans. However, the team will be available throughout the relationship with the bank to provide specialist franchising guidance you may need. The Lloyds Bank Franchise Unit works in conjunction with a reputable and experienced British Franchise Association affiliated solicitor to provide a full review of the franchise agreement at discounted rates. It is important to get the legal agreement checked and explained to you before you sign on the dotted line, and we can help you with this. Most banks will hand on your business plan to a locally based manager to assess your banking and financial requirements. In Lloyds Bank, we have 150 trained local managers who are available to support your franchising plans. Most banks provide a period of free transactional banking for new startup businesses to help in the early stages when you most need it. Banks offer telephone and online banking services to provide easy access to your finances 24 hours a day. These services are convenient for busy business owners who are unable to call at their local branch on a regular basis. You can check balances, review recent account transactions, transfer funds, and pay bills over the phone or from your computer. Most banks offer business cards to help make payments and to access your funds. They can also assist with businesses that need to accept card payments from their client base. Banks that have a branch presence on the high street offer face-to-face local banking services to support business customers. If you need general business insurance support with public liability, employer's liability, business equipment and interruption cover, banks may also be able to help you. Asset finance may be available from some banks to support with leasing of vehicles and other business equipment. Some banks have specialist teams available to help improve business cash flow through various debtor finance options. As your business grows, help is at hand from experienced managers to support your growth plans. Additional finance can be considered to assist with your franchise development plans. It is important to keep the bank updated with your developments so when you need help, they can respond quickly. For your business and financial needs, it's advisable to speak to banks with specialist franchise teams who can offer the professional advice and guidance you need to develop your franchise.